All right, so we've got this really interesting collection of articles and research on the whole global tariff situation.
Yeah.
And I think our goal here is to really get to the heart of what's going on economically,
Right.
what it all means, and maybe even spot some potential opportunities.
Absolutely.
It's like a deep dive into the most important takeaways from everything you've given us.
Yeah, I think that's a great way to put it.
So, I mean, one thing that's super clear from all this is, wow, 2025 has been a crazy year for global economics.
Yeah, okay.
And a lot of it seems to be driven by, well, the U.S. and all these tariffs they've been slapping on everything.
Yeah, and I mean, you see the market reaction right away. Everything just went totally haywire.
Totally.
And businesses, I mean, nobody knows what's going on. It's just
total uncertainty.
Uncertainty, yeah.
Yeah, and it kind of reminds me, when you read about the Smoot-Hawley Act back in the 1930s, the whole protectionist thing and how badly that went.
Not a good precedent.
Definitely not.
Well.
So I guess today we should really dig into what exactly these U.S. tariffs are, and then what other countries are doing about it, like the EU and China.
Right.
And then the actual impacts, on the markets and stuff, and what history can teach us about all this, and maybe what kind of investments might make sense, with everything changing and how businesses are adapting, and and this whole emerging markets thing. I mean, there's just so much to unpack here.
There is a lot.
So let's start with the U.S. tariffs themselves. I mean, what are we even talking about here?
Well, it all started with this Liberation Day thing on April 2nd, right? They put this 10% base tariff on basically everything coming in.
Okay.
But then on top of that, they added these extra tariffs. They called reciprocal tariffs.
Reciprocal?
Yeah, so they were targeted at countries where the U.S. has a big trade deficit, China got hit with 34%.
Wow.
The EU got 20%, Japan got 24%, and Vietnam got a whopping 46%.
46%. That's almost half.
Yeah.
Crazy.
It's it's supposed to be based on how much more we buy from them than they buy from us.
Okay.
But the thing is, with all the global supply chains and everything, it's not that simple.
Right.
And then earlier this year, we already had tariffs on China, 20%, Canada on potash and energy, 10%, and other stuff, 25%, Mexico, 25%, automobiles, 25%, but with a weird exemption for U.S. content, and then steel and aluminum, 25% across the board.
So, what's the logic behind all this? Why is the U.S. doing this?
Well, they're saying it's, national security and economic well-being, They invoked this thing called the International Emergency Economic Powers Act, or IEPA. Yeah, IEPA.
Got it.
Basically saying, these trade imbalances are a huge threat to the U.S.
Okay, so basically an emergency situation.
Yeah, that's how they're framing it.
I mean, I can see why the EU and China wouldn't be too happy about that.
Yeah, they were not happy.
So what do they do?
Well, the EU came back swinging, with retaliatory tariffs on all sorts of American stuff like bourbon whiskey and Harley-Davidson motorcycles.
Ouch.
Yeah, they even dusted off some old countermeasures from 2018 and 2020.
Wow.
And they're talking about 18 billion worth of new measures too.
18 billion.
Yeah, it's getting pretty serious.
And then there's that whole thing with Trump threatening 200% tariffs on EU wine and alcohol.
Oh yeah, that didn't go over well, especially in Italy.
Yeah, I bet.
They were not pleased.
So what about China? How did they respond?
Oh, they didn't just sit back. They slapped tariffs on U.S. goods, going up to 34% on everything.
Wow.
And they started restricting exports of rare earth minerals, which are crucial for a ton of industries.
Oh, I've heard about those, yeah.
And they even went after specific U.S. companies like Google with an anti-monopoly investigation.
Oh, wow.
And PVH, the closing company, they put them on this unreliable entity list.
Unreliable entity?
Yeah, it basically means they can restrict your business in China.
Yikes.
And they're also really clamping down on 5 specific rare metals.
Oh.
And they're planning to file a case with the WTO too.
So, I mean, with all this going on, the markets must have just totally freaked out, right?
Yeah, I mean, you saw the S&P 500 and the Dow Jones, they both took a huge hit.
Yeah.
And the VIX, the volatility index, that shot up to 25 in March.
Wow.
It was, the worst 2-day stretch since the beginning of COVID.
Really?
Yeah, and the Russell 2000, that got slammed too. Small cap stocks really got hammered.
Makes sense. They're probably more vulnerable.
Yeah, for sure.
So I guess it's not just like the overall market, right? Like different industries must be getting hit in different ways.
Oh, yeah, absolutely.
So what are we seeing there?
Well, for manufacturers, it's tough, Like the steel and aluminum tariffs, that just drives up the cost of everything.
Makes their inputs more expensive.
Exactly. And then you've got all the supply chain issues on top of that.
Right.
I mean, sure, maybe some domestic producers get a little boost in the short term, but overall, it's not good.
Not good at all.
No.
And what about the auto industry?
Oh, they're in a really tough spot,
Yeah.
because their supply chains are so global.
Yeah, they get parts from all over the place.
Exactly. And so prices are going up and they're expecting like way fewer sales.
Ouch.
Yeah, it's not looking good for them.
And I bet agriculture is taking a hit too, right?
Oh, yeah, big time.
With those retaliatory tariffs on stuff like soybeans and pork.
Exactly. And that's just like killing farmers' incomes.
Really hurting them.
Yeah.
So what about tech? Like all those tariffs on semiconductors and electronics, that can't be good.
No, it's not
Right.
at all. It's going to lead to like higher costs and all sorts of disruptions.
Yeah, that makes sense.
And then for consumers, I mean, we're all going to end up paying more for everything.
Yeah, like just basic stuff.
Yeah, even clothing. Like a lot of that comes from Southeast Asia, Bangladesh, and those places are getting hit hard with tariffs.
So everything's just going to get more expensive.
Pretty much, yeah.
And what about airlines? I bet they're feeling it too, right?
Oh, yeah. Initially, they got slammed. Everyone was worried about travel demand and all that.
Right.
But they've actually recovered a bit since then.
So not as bad as it could have been.
Yeah, for now, at least.
So, I mean, listening to all this, it's like history repeating itself, Like this whole Smoot-Hawley thing back in 1930.
Yeah, I know, right?
When they jacked up tariffs and then everyone else retaliated and it just made the Great Depression way worse.
Yeah, it's not encouraging.
Definitely not.
No.
I mean, they raised the average tariff to like 47% and then U.S. exports just plummeted like 28 to 32% lower.
It was a disaster.
Yeah, and the Dow Jones just kept sliding and sliding.
Bad times.
Yeah, very different from, what we saw after World War II with GATT and the WTO when tariffs were way lower.
Yeah. I mean, the average tariff was like 2.5% back then.
Huge difference.
Yeah.
And it's not like this is totally new, right? Like even with the Trump administration's tariffs a few years ago.
Oh, yeah, those steel and aluminum tariffs in 2018, that was like a preview of this.
Right. So we saw the market dip then too, and the EU retaliated with like what, 26 billion in tariffs?
Yeah, something like that.
And it ended up changing some supply chains, like Vietnam benefited from that, I think.
Yeah, they got a lot of business shifting their way.
So, I mean, all these new tariffs, it's got to be putting a real strain on like the U.S.'s relationships with other countries, right?
Oh, yeah, for sure.
Like the EU's not happy, Canada's not happy, and obviously China's not happy.
Nobody's happy.
Yeah, it's like a total breakdown of trust.
It's not good.
But I guess, when one door closes, another one opens, right?
Yeah.
Like maybe this creates opportunities for new trade partners.
Yeah, that's definitely a possibility.
Like who are we talking about here?
Well, Southeast Asia is looking pretty attractive right now, especially Vietnam.
Yeah, they seem to be doing well.
Yeah, and then there's Latin America, especially Mexico, with the USMCA, that trade agreement.
Right.
And then there's India and the ASEAN countries, too.
So a lot of potential new partners.
Yeah. It'll be interesting to see how it all shakes out.
So if some countries are losing out and others are benefiting, I guess that means certain industries are going to do better than others too, right?
Oh, yeah, absolutely.
So who are the winners and losers here?
Well, I think, with all this protectionism, some U.S. manufacturing is going to get a boost, like steel, aluminum, autos, that kind of stuff.
They're going to be more competitive.
Exactly.
Yeah.
And we might see some U.S. tech companies reshoring, bringing production back home.
Bringing it back.
Yeah, that's been a trend for a while, but this could really accelerate it.
And what about in other countries?
Well, like I said, Vietnam's looking good, especially for electronics and apparel.
They're becoming a manufacturing powerhouse.
Yeah, they are.
And then there's Mexico with the USMCA. They're probably going to see more auto and manufacturing activity too.
Yeah, they're in a good spot.
So, but if all this is changing trade flows, I bet it's also messing with foreign direct investment, right? Like where companies are putting their money.
Oh, yeah, big time.
So how's that playing out?
Well, I think the U.S. is going to be less attractive for foreign investment.
Yeah, makes sense.
Because all these tariffs just add costs and uncertainty.
Nobody wants that.
No, they don't.
And there are some projections saying U.S. GDP could actually shrink because of all this.
Yeah, it's not looking good.
So if money's leaving the U.S., where's it going?
Well, I think places like Vietnam, Mexico, India and other Southeast Asian nations are going to be the big winners.
So the same places that are benefiting from the trade shifts?
Exactly. It all kind of goes together.
So it's not just like overall investment flows, right? Like different sectors are going to see different things happening.
Oh, yeah, for sure.
So what are we seeing there?
Well, in the U.S., you're going to see more investment in those protected sectors like manufacturing.
Okay.
But then sectors that rely on imports, they're going to see less investment.
Makes sense.
And then in those countries that are benefiting, like Vietnam and Mexico, you're going to see a lot of investment in supply chain diversification.
Companies are going to want to spread the risk.
Exactly.
So like any specific examples of that?
Yeah, like Hyundai, the Korean car company, they just announced a huge new investment in the U.S.
Really?
Yeah, they're building a new electric vehicle plant in Georgia.
Wow.
So, even with all the tariffs, some companies are still betting on the U.S.
That's interesting.
Yeah, it's a mixed bag for sure.
So, I mean, for investors who are like thinking long term, what does all this mean? Like what kind of investment landscape are we looking at?
Well, I think, in this kind of environment, defensive sectors are always a good bet.
Okay.
Like healthcare, utilities, consumer staples, those kinds of things.
Things that people always need.
Exactly.
Yeah.
And then, with all this uncertainty about global trade, I think domestic-focused companies are going to do well.
Okay. Like companies that mostly sell within the U.S.
Exactly. And that's especially true for, like, the U.S. middle market.
Okay. Those smaller, less global companies.
Yeah, exactly.
So not just big multinational corporations.
Right. The smaller guys are going to be more insulated from all this.
Makes sense.
And then, of course, the companies that are benefiting from all this reshoring, like U.S. manufacturers and Vietnamese electronics companies, those are going to be interesting to watch, too.
Yeah, those are the clear winners.
For sure.
And I've also heard some people talking about gold, like as a safe haven asset.
Oh, yeah, that's classic. When things are uncertain, people flock to gold.
It's like the original safe haven.
Exactly. And I think we're going to see more of that, for sure.
So less about stocks and more about like hard assets.
Yeah, I think that's a trend we're going to see. And also, with the U.S. government trying to boost domestic production, we might see a lot more capital spending here.
Okay, so companies investing in new factories and equipment?
Yeah, exactly. That could create some interesting opportunities.
And what about like international markets? Are there any bright spots there?
Well, it's hard to say, but, if the EU and China start doing a lot of fiscal stimulus to offset the effects of all this, their equity markets could actually do pretty well.
So it's all about like how governments respond.
Exactly. It's a lot of moving parts.
So, okay, let's say you're a business owner, right?
Yeah.
And you're trying to navigate all this craziness. What are some of the like key things you need to be thinking about?
Well, first of all, you got to diversify your supply chains.
Okay, not just rely on one country.
Yeah, like the whole China plus one strategy. Have your main supplier in China, but then have a backup somewhere else.
Spread the risk.
Exactly.
Yeah.
And then nearshoring and reshoring, bringing production closer to home.
Okay, like instead of China, maybe Mexico or even the U.S.
Yeah, exactly. And that can help with like lead times and transportation costs too.
And I guess you also need to like renegotiate contracts, right?
Oh, yeah, for sure. With all these tariffs changing the game, you got to make sure your contracts still make sense.
Yeah, otherwise you could get squeezed.
Exactly. And maybe even think about like cost sharing with your suppliers.
Okay, so everyone shares the burden.
Yeah, something like that. And then there's product redesign too.
Okay, how does that fit in?
Well, maybe you can switch to different materials that aren't subject to tariffs, or maybe you can simplify your product to use fewer parts.
So basically get creative.
Exactly. Be flexible and think outside the box.
Yeah, and I guess pricing is going to be a big challenge too, right?
Oh, yeah, for sure. You got to figure out how to pass on these higher costs to your customers without losing them.
Yeah, it's a tough balancing act.
It is, but it's something every business is going to have to deal with.
So we talked about some of the industries that are like likely to benefit from all this, but I guess, zooming out a bit, there's this whole bigger picture of emerging markets, right?
Oh, yeah, definitely.
Like, what are we seeing there?
Well, I think this whole tariff thing is going to be a huge boost for emerging markets, especially in Southeast Asia, Latin America, and India.
Makes sense. They're getting the business that's shifting away from China.
Exactly. And within those countries, certain industries are going to do really well, like domestic U.S. manufacturing, of course.
Yeah, they're getting a lot of protection.
And in logistics and infrastructure in those beneficiary countries, they're going to be booming.
Yeah, they need to build out their capacity to handle all this new trade.
Exactly. And then there's U.S. chemicals, too. They're in a good spot.
So a lot of opportunities out there.
Yeah, definitely.
So I guess, for individual investors who are trying to make sense of all this, what are some key takeaways?
Well, I think the biggest thing is diversification.
Okay, not putting all your eggs in one basket.
Exactly. Spread your money across different asset classes, different sectors, different countries.
So stocks, bonds, real estate, maybe even some commodities.
Yeah, all of that.
And I guess, with all this uncertainty, defensive stocks and sectors are probably a good idea too, right?
Yeah, for sure. Like we talked about before, healthcare, utilities, that kind of stuff.
Things that are always in demand.
Exactly. And then you might want to look at some international markets too.
Okay, but be selective.
Yeah, definitely focus on those countries that are benefiting from all this, like Vietnam and Mexico.
Right, where the growth is.
Exactly.
And then bonds, I guess they're always a good option for stability.
Yeah, especially if interest rates start going up.
Okay. And I guess dollar cost averaging is always a good strategy too, right?
Oh, yeah, especially in a volatile market like this.
Just like invest a little bit every month, no matter what the market's doing.
Exactly. That helps you average out the ups and downs.
Makes sense.
And then, some people are even talking about cryptocurrencies as a potential hedge against all this uncertainty.
Really? Crypto?
Yeah, I mean, Bitcoin is often called digital gold, right?
Yeah, I've heard that.
And so the thinking is, like, if all this trade war stuff leads to inflation, Bitcoin might hold its value better than traditional currencies.
Interesting. So it's like a store of value, kind of like gold.
Yeah, that's the idea, but it's still a very young asset class, and there's a lot of volatility.
Yeah, crypto's always a gamble.
It is. So if you do go that route, diversification, dollar cost averaging, and a long-term perspective are key.
So same principles as with any other investment.
Pretty much, yeah.
But I guess, with all the different opinions out there, it's hard to know what to think about crypto.
Yeah, it's definitely a complex landscape.
So, okay, stepping back from specific investment strategies, do you think there were other ways the U.S. could have approached this whole tariff thing?
Oh, yeah, for sure.
What could they have done differently?
Well, I think a more gradual implementation would have been better.
Okay, so not just suddenly slapping on all these tariffs.
Yeah, that just creates chaos.
Yeah, everyone needs time to adjust.
Exactly.
And maybe more targeted tariffs too, right?
Yeah, like tariffs with very specific objectives, not just broad-based tariffs on everything.
So if you're trying to protect a specific industry, you just target that industry.
Exactly. And then I think better communication and transparency would have been huge.
Okay, so being clear about what you're doing and why.
Yeah, instead of just surprising everyone with these sudden announcements.
Right, that just creates more uncertainty.
Exactly. And then, I think they could have done more to cushion the impact on consumers.
Okay, how?
Well, things like subsidies, tax credits, maybe even some kind of relief for small businesses.
So basically helping people who are getting hurt by the tariffs.
Yeah, exactly. And then finally, I think tariffs should really be used primarily as a negotiation tactic.
Okay, so a temporary measure to get other countries to the table.
Exactly, not as a long-term solution.
Because in the long term, they just end up hurting everyone.
Yeah, that's the danger.
So, after looking at all these sources, is there one big takeaway, one theme that really stands out?
Yeah, I think it's adaptation and resilience.
Adaptation and resilience.
Yeah, this whole global trade landscape is changing so fast.
It's crazy.
And businesses, investors, everyone, we all need to be able to adapt and be resilient in the face of all this change.
So it's not about predicting the future.
No, it's about being able to roll with the punches.
Yeah, and being able to bounce back from setbacks.
Exactly.
I like that.
So I guess that's our deep dive into this whole global tariff surge.
Yeah, we've covered a lot of ground, and it's all thanks to the sources you brought us.
Yeah, it's been a really interesting exploration.
It has, and it's clear that this is just the beginning.
Yeah, the long-term consequences of all this are still unfolding.
And it's going to require some really smart decision-making from everyone involved.
Absolutely.
So to you, our listener, as this global trade landscape keeps changing and reshaping itself, what new strategies are you going to need to not just adapt, but to really shape your own future in this new world?
It's a question worth pondering, that's for sure.
Yeah, definitely food for thought.
Yeah.
Thanks for joining us on this deep dive, and we'll see you next time.
See ya.